Today is the 5th of December 2022. My name is David Hickson, and in today's market update we're going to be taking a look at the S&P 500. In particular, we're going to be taking a look at the detail of how stock markets form peaks, because I've had several questions following last week's market update in which I mentioned that the S&P 500 and many stock markets around the world are in the process of forming an 80-day cycle peak. So let's take a look at the markets. Here is the S&P 500. This is the chart that we were looking at last week. And I won't be repeating what I said last week. You can easily go back and take a look at that video. The important thing is that we are expecting an 80-day cycle trough around about Christmas time. And then, of course, we're expecting a bigger cycle trough, either 20-week magnitude or possibly even higher magnitude early next year, towards the end of February or early March. As discussed last week, the magnitude of this trough that formed in the middle of October is still questionable. We're not sure if it's 20-week magnitude or even greater magnitude. And I mentioned in recent market updates that, of course, we are going to determine the magnitude of that trough. Was it only a 20-week cycle trough, or was it possibly an 18-month cycle trough that formed in the middle of October, by monitoring the cycle shapes, in particular where the peaks form and where the troughs form as the cycle action unfolds. In last week's market update, which was recorded on Monday over here, I mentioned that the 80-day cycle peak was forming, and there was the possibility that the 80-day cycle peak occurred over here, but now, of course, we have a higher peak over there. I've had several questions about peaks in stock markets, and why is it that peaks are complicated? I have often said that peaks are complicated when it comes to stock markets, and there's a very good reason for that, which I would like to explain in today's video. So let's take a look at a very different chart. You might have seen these charts before. This is a simple Excel spreadsheet, and you can see that we have some sine waves here. In particular, there is this green line over here, which is simply a sine curve, and this purple line over here, which is another sine curve. These sine curves represent cycles influencing the price movements of financial markets, and they obey some of the rules that Hurst defined when he defined his principles, in particular the principle of synchronicity, which tells us that the troughs of the cycles occur synchronously or at the same time where possible. And so you can see that the green and the purple cycles presented here experience troughs at the same time, at the left-hand edge of the chart and at the right-hand edge of the chart. Of course, there is also a trough of the green cycle over here, and there is not a trough of the purple cycle. The reason for that is because of another one of Hurst's principles, the principle of harmonicity, which is that the wavelengths of these cycles are related to one another by a small integer value, in this case a ratio of 2 to 1, and so the wavelength of the purple cycle is twice as long as the wavelength of the green cycle. Because of that, it is impossible for every single trough of the purple cycle, of course, to occur synchronously with a trough of the green cycle. We are also applying another principle of Hurst's, the principle of summation, which tells us that the way in which cycles influence financial markets is by a simple process of summation. In other words, you add up each cycle's influence. And so this blue line over here is the result of, very simply, adding up the amount of influence of the green cycle, measured on the sine curve over there, plus the amount of influence of the purple cycle, and you end up with a total, a summation, which is this blue line over here. We are only considering two cycles here, starting off very simple, but you can see the result of combining two cycles to produce a resultant price movement, as it were. First of all, we get the M shape that I often speak about, that cycles form in markets. But appropriate to today's discussion, let's take a look at the peak of this M shape. Let's assume that this is an 80-day cycle. In other words, the purple cycle on our chart is the 80-day cycle. That means that the green cycle over here would, of course, be a 40-day cycle. So let's consider, where is the peak of this 80-day cycle? you will notice that on this diagram there are in fact two peaks, and they are absolutely equal. There is a first peak over here and there is a second peak over there. That's because we're only combining two cycles. We will combine more cycles in a moment and consider what happens there. But that's the first observation to make, is that there are two potential peaks to every cycle. The other interesting observation to make is that the peaks are not synchronized. What do I mean by that? Well, here is the peak of the 40-day cycle. You can see it over there very clearly in that sine curve. And if we extend upwards, you will notice that the peak, the first peak of the 80-day cycle, is not actually occurring synchronously, in other words, at the same time as the peak of the 40-day cycle or the green cycle over there. It is displaced to the right. What about the second peak of the 80-day cycle? Here you can see the peak of the green cycle or the 40-day cycle, and if we extend that point upwards, you will notice that the second peak of the 80-day cycle is occurring earlier and also not synchronously with the peak of that green cycle. What about the peak of the actual 80-day cycle itself, not the peak as manifested in price movement? Here is the peak of the 80-day cycle. It is over here, right in the middle. And of course, the peak in terms of price is either occurring much earlier or much later than the peak of the actual cycle itself. Compare this to the troughs for a moment. You will notice that the trough, in terms of both price and the cycles, occurs synchronously at the left-hand edge and at the right-hand edge of the chart. You will also notice, as a matter of interest, that the trough of the 40-day cycle or the green cycle over there does in fact occur synchronously in terms of price and the cycle itself. This purely mathematical result of combining the cycles that influence financial markets provides us with the answer as to why peaks are complicated. These peaks are very complicated. The peak of the 40-day cycle occurred there, the peak of the 80-day cycle occurred there, and we have two potential peaks, one over there and one over there, and it is not synchronous with either the 40-day cycle peaks or the 80-day cycle peak in terms of the actual cycle influence. Let's add another cycle and get just a little more complicated about this. I should point out that in these diagrams there is one principle of Hurst's that I am not applying entirely correctly. That is the principle of proportionality. Hurst's principle of proportionality tells us that the amplitude of cycles varies in direct proportion to the wavelengths of those cycles. And so you would expect that a cycle that has double the wavelength of a shorter cycle would have also double the amplitude. You will notice in these diagrams that I've not applied that principle correctly. The amplitudes of the longer cycles are slightly greater than the amplitudes of the shorter cycles, but it does not obey the principle of proportionality perfectly. There are two reasons for this. The first reason is that in my experience, the principle of proportionality is the least reliable of all the principles when it actually comes to applying these principles to financial markets. The amplitudes of the cycles are much more variable. The other reason is that these diagrams are much easier to understand if we adjust the principle of proportionality. And in fact, I'm applying a ratio of 1.2 to the proportion between the cycle amplitudes as opposed to 2 to 1. So in other words, each cycle is 1.2 times the amplitude of the shorter cycle in this diagram. The ideas I'm presenting in terms of the displacement of the peak or the complexity of the peaks is not changed by affecting this principle of proportionality. Here we have combined three cycles. Let's assume that the longest one is again the 80-day cycle. This orange cycle is the 80-day cycle. This purple cycle over here would then be the 40-day cycle, and this green cycle would then be the 20-day cycle. Again, in terms of price, we have two peaks for the 80-day cycle. And again, you can see the complexity of the formation of the peaks. Here is the peak of the shortest cycle, and yet the peak in the price action is displaced to the right. Here is the peak of the next longer cycle, and you can see there is no peak over there because that peak is in fact displaced a good deal to the right to that position over here. If we extend the point of this green peak upwards, you will notice that in fact the price peak is displaced a little bit to the left. This kind of Excel spreadsheet is very easy to set up, and I would encourage you to explore these ideas for yourself. You can understand how the very simple mathematical process of combining these cycles results in complex peaks if we assume that the troughs of the cycles are synchronized. One other observation that I would like to make while looking at this diagram: if we assume that the purple cycle is the 80-day cycle, then this trough over here is, of course, the trough that occurred in the middle of October, which I am convinced was of at least 80-day magnitude. The next 80-day cycle trough will be this one over here, and that is expected around Christmas time, as I've already mentioned. What can we say about the peak of the 80-day cycle? Well, it is clearly over here. But the important point about that is that the peak is occurring late. Can you see that? It is occurring after the halfway point, or after the peak of the actual 80-day cycle itself. And the reason that peak is occurring late is because of the magnitude of this cycle trough over here. As we add greater and greater magnitude on the left-hand edge over here, the peak of the cycle gets displaced further and further to the right. And that is what I mean by having the magnitude of a trough revealed by identifying the position of the peak. Let's go back to the price action and consider what is happening. Let's adjust this chart down a little bit, and let me display the composite model line, which is the result of combining the different cycles that have been found in the analysis. Now, the important thing here is that, of course, in October we had a fairly high magnitude peak of either 20-week or even greater magnitude. As mentioned, the greater the magnitude, the later the peak will occur. At the moment, we have this peak over here, which occurred last week on Thursday, I believe, and so potentially price is now turning down and moving down into the 80-day cycle trough expected around about Christmas time. But is that peak absolutely confirmed? No, not yet. If we zoom in and take a look at some FLDs, which will of course confirm that the peak has formed as price crosses those FLDs, you can see that on this end of day chart, price has not yet even crossed below the 5-day FLD. There is the 10-day, and then there is the 20-day, and then of course the 40-day FLDs, which will probably all be crossed on the way down to the 80-day cycle trough. And so we don't have confirmation that that peak has yet occurred. We are certainly expecting it, because price does need to turn down and reach this 80-day cycle trough around about the time of Christmas. But the later that this peak forms, the greater it would seem that the magnitude of this trough is in the middle of October. And that is a really important point. Now, if we zoom out, I would like to show you something interesting that we can do in Sentient Trader. We can perform an analysis based on the concept that the peaks are synchronized, as opposed to the troughs being synchronized. It gives us some interesting additional insight. Let me show you what that analysis looks like. Here it is, and as you can see, we have a very clear and fairly high magnitude peak which formed over here right at the beginning of 2022. You will notice that the peak analysis is not quite as neat as the trough analysis. If you look at these nests of lows here in the trough analysis, they are generally much neater than they are in the peak analysis. Here you can see them sort of spread all over the place, and they're overlapping each other. And here we have a 40-week cycle peak floating rather in the middle of nowhere. And the reason for that is actually very important. It is because the peaks are probably not synchronized. However, the fact that peaks are not necessarily synchronized doesn't mean that they are not synchronized. And so there is an interesting situation that develops. If we measure the number of bars that elapse from that big peak at the beginning of 2022, you can see a fairly long 84-day cycle over here, measuring peak to peak, and then a much shorter 80-day cycle of only 62 days in length. This greatly differing wavelength is something you will often see in the peaks. Now, I'm not showing you this peak analysis to confuse you. I'm showing you an interesting thing that tends to happen when peaks are analyzed in this way. Notice this nest of highs over here for the 40-week cycle peak, which we are expecting. You can see that it is very unbalanced. As I've already pointed out, there is the 40-week cycle circle, and here are the circles for the 40-day, 80-day, and 20-week cycle peaks. What is probably happening? What is happening, in my opinion, is that these peaks are not, of course, synchronized. And so we have a very neat nest of highs for the 20-week cycle peak over here. And indeed, we did experience a peak at that time. That was right at the end of October. But what about this 40-week cycle peak? Where is that 40-week cycle peak going to occur? It is probably going to occur asynchronously. In other words, it's not going to occur at the same time as what would be considered the 20-week cycle peak that occurred, in my opinion, at the end of October. Interestingly, the circle for the 40-week cycle peak occurs after the time that we are expecting this 80-day cycle trough to occur. Let's zoom in and take a closer look at that. If we accept the fact that this 40-week cycle peak is not necessarily going to occur synchronously with both the 20-week cycle peak and the shorter cycles, then it might occur in line with this 40-day cycle peak, which is expected over here later this week or next week, or it might occur synchronously with this 80-day cycle peak over here in early January. The important thing, and let me slide this chart over a little bit to the left to repeat the summary that I made at the end of last week's video. We are expecting an M shape in this cycle. There is that M shape. That is a fairly neutral M shape. But the fact that we are experiencing a late peak indicates bullishness, not entirely unexpected bullishness. But the later this first peak occurs, the more bullish the market is, and therefore the greater magnitude of this trough is likely to have been. Then we are going to witness price falling down into the 80-day cycle trough, and then we will see price rising up to a second peak. It is quite possible that that will end up being a higher peak, which would indicate greater magnitude for this trough in the middle of October, in which case price will be dropping down into a trough of only 20-week or 40-week magnitude in March of next year. If, however, we experience a lower peak in early January next year, then we would expect a greater move down into the trough in March of next year. I do hope this video has given you some insight into the complexity of peaks and why it is that I often say that peaks are complicated. We will be watching as price forms this peak and moves down into the 80-day cycle trough at around about the time of Christmas in order to better determine the magnitude of the trough that formed in the middle of October. I do hope that you found this market update useful and interesting. Please pay a visit to our Hurst Cycles notes site, where we are regularly publishing Hurst Cycles analysis of major markets around the world. If you have any questions, join us on our Discord server, or you are very welcome to put a comment below this video. I look forward to hearing from you.